Okay, let's look at a problem with what you just learned about all the different payroll taxes. And again, we're focusing on the company side on payroll liabilities. We have Giselle here, who's an accounting major, and she gets a job upon graduation, making $60,000 a year. She gets paid bi-monthly. So these are just terms, some more business terms you should know. What do you think? When does Giselle get paid? That would mean twice a month, okay? So what is Giselle's gross paycheck? Well, if it's $60,000 a year and she gets paid twice a month, there's 12 months in a year, twice a month would be she's going to get 24 paychecks per year. Her gross paycheck would be $2,500. Remember, in accounting, gross just means bigger and net means we have reduced the gross by something. So for those of y'all that work, you know your gross paycheck is never the amount that you actually get deposited into your bank account. It's always smaller, right? Why? Well, that's what we're about to go through with Giselle. What would her net paycheck be? Well, let's start here with her $2,500 gross. And it says, assume the related cost for this one paycheck would be federal income taxes. So now you've got to quiz yourself and go, oh, who pays for that? Does Giselle, does it come out of her paycheck or does the employer pay for it? Well, this comes out of Giselle's paycheck, right? She's got to pay those federal income taxes. So would that add to Giselle's gross or reduce it? It would reduce it, right? They took $300 away to send in to the federal government. What about state income taxes? Also Giselle's responsibility. So that's going to reduce her gross paycheck even more. And you might go along and, write things in here, especially if you're on a test and say like, oh, that's the employee's responsibility, employee's responsibility. What about this FUTA and SUTA? Can y'all remember what sort of taxes those are? Remember I said think of that U. It stands for unemployment taxes, federal and state. I've just combined them here together and said, those are $75. So now our question is, who pays for that? Giselle or her employer? This is an employer tax. Giselle does not have to cover that, so it does not come out of her paycheck, okay? I'm going to skip that. Then we come to FICA taxes. Can you remember the two things that make up FICA taxes? It's our Social Security and Medicare together. Those are called FICA, or a lot of people just call them payroll taxes. So, okay, I'm giving you the percentage on here, 7.65%. Your job is now to tell me who pays that. Well, remember, both Giselle and the company pay it in matching amounts, so they both have to pay 7.65%. So we're going to come back to Giselle's paycheck of $2,500, and we're going to multiply that by 0.0765. $191 more dollars is going to come out of her paycheck and 25 cents to cover those FICA taxes, to pay in for Social Security and Medicare. Then it says Giselle has health insurance through her company that comes out to $8,400 a year, but her company agrees to pay for half of the cost and Giselle pays the other half. So first of all, we go $8,400 for insurance, divided by 2. Giselle's half, would be $4,200. Giselle pays this and her company pays another $4,200, but we're looking at just one paycheck. This is for the whole year, right? So I'm going to say $4,200 is Giselle's part for the whole year, divided by what? 24 paychecks in this situation, because it said she was paid bi-monthly. So another $175 comes out of each paycheck to help pay for her insurance. What else do we have? Giselle wisely also contributes 8% of her salary to her 401k retirement savings. That's a specific kind of retirement savings that a lot of different employers offer. And then the company contributes 5% of her salary to the plan as well. So how much is going to come out of Giselle's paycheck? 4,200 times what? 8%. That's her contribution, right? So $336 for her. You can either write retirement, or a lot of people call it 401k because it's so common. Now, if you are going to take my tax class later on, we're going to learn that some of this, I've generalized some and I haven't done exactly right. But because this is for a principles of financial class, then we're making it as easy as possible. What is Giselle's net paycheck? Well, she started out, sounded great, $2,500, but then she had to pay 300 for that, 150 for that, 191.25 for that, 175 for that, and 336 for that. Holy smokes, poor Janelle. She ends up with only $1,730 that she can actually spend. The rest of it went to being a grown-up. All right. Now let's look at this from the employer's standpoint, which is really what this chapter is getting to with payroll liabilities. But I think this is so important because we all work. We want to know how much we get to take home, right? Okay, now watch how we're going to do this differently. Not only do we have to concentrate on what the employer is actually responsible for, but read what this question says. It says, now look at it from the company's point of view. If they want to make Giselle an offer, a lot of you guys are management majors or you might be HR, and you say, hey, we really want this Giselle girl, let's hire her. But your accountant goes, well, how much money do you need to hire her? Here's our budget. We only have so much. How much are you going to need? And you go, well, I'm going to make her a $60,000 offer because that's competitive right now. I can't pay her less than that or she won't come to work for us. So in the company's budget, they know they need $60,000 for the salary. But is the company going to have to pay anything else related to that salary? You bet they are. So now we have to go through and tell the company how much else they're going to have to pay. We look at this exact same information and we go, well, Giselle's federal income taxes are 300. Does the company have to pull that out of their pocket? No, they withhold it from Giselle's paycheck and they'll turn it over to the government for her, but the company doesn't have to pay for that. So we're not going to add anything for federal or state income taxes. Okay, then we get to those FUTA-SUTA taxes. Notice we didn't take that out of Giselle's paycheck, so the employer has to pay those. So that's $75 for FUTA and SUTA. Stop for a second and notice on our employee, all of these taxes came out of her paycheck and reduced it and reduced it. But for the employer, what I'm trying to get to is how much do I have to have in my budget to be able to pay Giselle this? So I'm going to add all of these amounts to her salary because the company's got to have 60 grand plus another 75 to pay those FUTA taxes for Giselle, okay? So then we have FICA taxes of 7.65%. We took that out of Giselle's paycheck, but remember that's the one that both the employee and the employer have to pay in equal amounts. So we're going to have to add $191.25 to what that employer needs to budget to pay Giselle. And that $8,400 per year for insurance, Giselle's going to pay half and the employer is going to pay half. We're looking at this on a yearly basis for the employer. So we need to add $4,200 for that insurance that they told Giselle they would pay for her. And finally, we have 401k. So for health insurance and 401k, the problem's going to have to give you amounts or percentages because those are not prescribed by the government. So that's one thing to definitely look for and compare when you're looking at jobs. Find someone that not only pays you well, but they're offering big retirement benefits and health insurance benefits. So they told Giselle, hey, we'll put in 5% of what you make to your retirement plan. So I'm going to take $60,000 times 5%. They're going to give Giselle another $3,000 a year for her retirement. And I think I've gone through all of those now. So this manager, and this is usually management's job, is to tell the company, hey, y'all got to make sure you have not only 60 grand for me, but I need another $75 to pay her FUTA-SUTA, another $191.25 to pay her FICA, another $4,200 to pay her health care, and another $3,000 to pay towards her retirement. If we want to hire Giselle company, we need $67,466.25 in our account. Jennifer, what all does this have to do with payroll and current liabilities? Well, again, as the company withholds these amounts from Giselle's paycheck, they're going to be reported as a liability on the company's balance sheet because they owe this to the government or to the insurance company or to the brokerage that's handling the retirement. Same with these amounts over here. Each week that goes by and the company's got to pay more and more into Giselle's FICA and FUTA and insurance and all that, they become current liabilities until the company writes a paycheck out to the government or to Blue Cross Blue Shield or to Edward Jones handling the retirement or whatever, right? So that's why this is in the current liability section. But hopefully you can work these side by side and see the differences in why we're subtracting over here and adding over here, and really quiz yourself on who owes what taxes. And that is it for payroll taxes.